Hi guys! Welcome to this new video in which I will show you a simple 6 steps trading strategy for beginners. You will learn in a systematic way to find trading setups and to place trades. With 6 simple steps, really easy to follow. So let's not waste any time. Let's start right away. Have a look on this chart. We are in the Euro-Canadian dollar on the 1-day chart. And our first step is to find the underlying trend of the market. To make it easy, we'll pick this uptrend, which is making higher highs and higher lows. So we're definitely in an uptrend. So in this case, we will look later on for buy trades. In a downtrend, it would be, of course, sell trades. But let's start with this example with a buy trade. After we define the underlying trend, as the next step, we will look for a support and resistance level. Meaning we will find the latest level of resistance that was broken in this uptrend. Let's see. We will pick this resistance level. As you can see, the resistance level was already respected multiple times. And at this point, the level of resistance was broken in the uptrend. So it's a likely area where the price could find support, meaning a high chance for us of the market going further up. That's what makes this resistance level a good second criteria. So, as our third step, we will now switch to a smaller time frame. We will switch to the 1-hour chart, scroll back to our resistance level, and pick a trade entry here. So let's sum up for now. We are in an uptrend. We found a level of support and resistance, meaning it was a more than once respected level of resistance, or that is likely an area where the price could find support and continue the uptrend. Therefore, we went down to a smaller time frame to find a trade entry. And now our fourth step is to find a reason for entry. Therefore, we look in this area where the price is moving in the resistance level. And there are many different ways to find trade entries. Today, I picked for us as a trade entry the double bottom. For uptrends, it's the double bottom, and in downtrends, it's the double top. But we're in an uptrend now, so we're using the double bottom. And as you can see, we have a double bottom here, which will be our chart pattern for the trade entry, supported and confirmed by this beautiful hammer candle, a single candle candlestick pattern for bullish trend reversals. So let's place our trade, which also brings us to step number 5, which is put always a stop loss to your trade. Here you can see we will put the stop loss 10 to 20 pips below the last low. As well, here again, there are many ways to put a stop loss. You will have to find out what works best for you. It always depends on your individual risk management. But what's important is that the trading idea is over as soon as the market drops below the resistance level. That's why we place our stop loss right there. What might be really important at this point as well to point out again, because it's just so important, please always keep in mind, trading ideas don't always work out. We try to find high probabilities where the market continues long or short. But that doesn't mean that the market always does what we think it will. Exactly, there are 3 possibilities. The market can continue long, the market can go sideways, and the market can decide to go down. And we choose the highest probability to enter a trade. And before we do so, we use different conditions to confirm this higher percentage before we enter a trade. If we cannot confirm, we don't enter a trade. So always keep that in mind. But now let's continue with our last step. Step number 6 is to place a target to our trade. There's also many different ways to place a target. It's always individual, so you will need to find your own way here as well. Some people take 2.5 times the risk, or some people place the target below the last high. But in this case, I will just place it around here because it is a risk-reward ratio around 2.5, and it's also, as you can see, I will draw in a line. Here was the last high, and this is the candle's body, and we place it below. So it also meets the criteria of being below the last high. It meets the criteria of a risk-reward ratio around 2.5. So it's a really good position to place it here. But it's only one out of many different ways. So you will find your individual way here as well. And as you can see, how the market went further up, the trade turned out. So, to understand the strategy better, we will look at a different example in a downtrend this time. So we are on the US dollar Japanese yen chart now in the 1-day time frame. And as you can see, I've already drawn in a support and resistance level. It was already tested from both sides, here and here. Now we go into a smaller time frame and switch to the 1-hour chart. And here we will look for step 4 now, find a trade entry. And since we're in a downtrend now, we look for a double top, which we have a beautiful double top here, right in the resistance level. That's why this will be our trade entry. We'll put a short position. Set the stop loss 10 to 20 pips above the last high. We will place the target, what's really individually again. But in this case, I will place it not right 2.5 the risk because the last low is around here. So I won't go further with the target. So it makes the risk reward ratio in this case around 2.3. But here again, you will need to find your own way to place these positions. So now you know how to use this strategy as well in an uptrend and in a downtrend. Let's sum up the 6 simple steps for you to use first in a demo account to try this strategy and find your own way to use it. First, find the trend. Is the underlying trend an uptrend or a downtrend? Meaning, are you looking for a buy trade or sell trade? Second, how to find a good level of support and resistance. And then go down to a smaller time frame in the next step, where you will find a reason for entry as the 4th step. And then don't forget to do step 5 and 6, put a stop loss to your trade and place a target. And what's also really important, never forget, this is the strategy, but you always need a good risk management. And for trading, you also need a good mindset. Trading psychology is a really important factor in trading as well. Because if you don't work as a human, it doesn't matter how good your strategy is or your risk management. If you act emotional, you will do mistakes and you will lose money. So always take care of all these factors. Good mindset, good risk management, good strategy. Keep that in mind. So if you enjoyed this content, please leave me a thumb up. And if you have any questions or suggestions, I will be happy to read your comments below as well. And also, please don't forget to subscribe to my channel for more really interesting videos to come up soon on my channel. See you there. Bye bye.